Welcome to the deep dive. If you're interested in figuring out the complexities of setting up a crypto trading company in the UAE, well, you've definitely come to the right place.
hmm
It's a really fascinating area, loads of potential, but let's be honest, it's not exactly simple.
That's spot on. Yeah. The UAE has really made a serious play to be a future leader in this whole virtual asset space. They aren't
Mhm.
just watching, they're actively, shaping the regulatory environment,
Right.
which for anyone listening means, well, it's a mix of really exciting opportunities and, frankly, some pretty complex paths to figure out.
Exactly. So the mission for today's deep dive really is to help you get a clear picture of what it actually takes. We've gathered a lot of information on forming a crypto company there, and we're going to pull out the key bits,
Mm.
the regulatory side, the licensing, all those crucial things you need to think about.
And I think what's really key to grasp right from the start is that this isn't some simple one-size-fits-all deal. You're looking at a system with, well, layers. Yeah, you've got federal rules applying across the board, then specific regulations in each emirate, and these distinct regulatory setups within the financial free zones. Getting your head around those nuances as well is absolutely critical.
Okay, right. Let's start unpacking that then. The big picture first. This evolving regulatory landscape. It's clearly not static, is it? Things seem to be moving pretty fast.
Oh, definitely not static. The UAE has a very clear goal, becoming a top global hub for virtual assets.
Mm-hmm.
And their regulatory approach really shows that. It's proactive. It
Mm.
is, as I said, multi-jurisdictional, which, yeah, might seem a bit complicated at first glance.
So if you're thinking about setting up shop, who are the big players, the main regulators at the federal level you absolutely need to know about?
Okay, federally, two key authorities really stand out for you. First, the Securities and Commodities Authority, the SCA,
SCA, right?
and second, the Central Bank of the UAE, which everyone calls the CBUAE.
Let's take the SCA first then. What's their specific role in this whole picture?
Okay, think of the SCA as the main regulator for crypto assets on the mainland UAE. So not the free zones, the mainland.
Got it.
They're the ones setting the rules for things like offering, issuing, listing, and trading these assets. So if your business plan touches any of those activities on the mainland, the SCA is your main point of contact.
And it sounds like they take a pretty broad view. Their oversight is quite comprehensive.
It is, yeah. They have specific licensing requirements, obviously, and they do pretty thorough checks,
Yeah.
especially around anti-money laundering, AML, and counterterrorism financing, CFT. That's a big focus.
Okay.
And really important if you're thinking about fundraising this way, they've classified initial coin offerings, ICOs, as securities. So that puts them firmly under SCA rules.
That's a really crucial point. So an ICO on the mainland means you're automatically in the securities regulation zone.
Precisely. And the SCA also mandates licenses for exchanges and crypto wallet services. They don't work in a vacuum either. They actively coordinate with ADGM's FSRA, that's Abu Dhabi Global Markets Regulator, and Dubai's VAA, trying to keep things somewhat consistent across the UAE.
Okay, so SCA handles the mainland side. What about the central bank, the CBUAE? Where do they fit in? What's their main angle on crypto?
Right, the CBUAE. Their primary concern is always the stability of the overall financial system. So when it comes to virtual assets, their focus is mainly on the connection point between traditional money like the dirham and crypto.
The fiat to crypto gateway.
Exactly. They regulate payment services, digital banking services that involve virtual assets. And again, a huge emphasis for them is AML and the financial security around those fiat crypto transactions.
I think I remember seeing something about some guidelines they put out recently.
Yes, spot on. In May 2023, they issued specific guidance for financial institutions,
Yeah.
basically telling them how to do their homework, their due diligence on virtual asset service providers, VASPS. They also brought in their stored value facilities, or SVF, regulation back in 2020, and that actually includes provisions that cover virtual currencies too.
So they're really looking at the wider impact, the systemic risk aspects.
Exactly right. And they're definitely looking ahead. They've approved plans for licensing and overseeing stablecoins, especially dirham-backed ones.
Interesting.
Yeah, it signals a move towards integrating digital currencies more formally into the existing financial plumbing. They've also issued AML-CTF guidelines specifically for banks dealing with virtual assets and approved the Payment Token Services Regulation. That covers licensing for digital payment services, including stablecoins.
It really does sound like the overall federal plan is to build out this comprehensive framework. with the CBUAE making sure digital currencies are integrated in a, well, controlled and secure way.
That sums it up nicely, yeah. Now, if we shift focus a bit to the emirate level, Dubai has made some really big moves, hasn't it?
Yeah.
Especially with VARA.
Absolutely, VAR. The Dubai Virtual Assets Regulatory Authority, established March 2022. That really made waves globally, didn't it? The world's first independent regulator just for virtual assets.
It did. It really underlines Dubai's ambition to be a major global player here. VARA's job is regulating virtual assets within Dubai. But, important point, this excludes the DIFC.
Right, the Dubai International Financial Center, that's its own world.
Exactly. DIFC has its own distinct regulatory setup.
And VR's goal is basically positioning Dubai as this hub for crypto innovation, but, importantly, with strong compliance built in.
Precisely. Innovation with guardrails, you could say. And the early numbers showed huge interest. I mean, in their first year, they got something like 133 license applications, issued 19 VASP licenses. That's significant.
Yeah.
And they've been busy developing rules, too, for staking, stablecoins, other VAs backed by real-world assets.
So bottom line, if your business is based in onshore Dubai outside the DIFC, a VAI license is non-negotiable.
Absolutely essential. And since July 2023, VARE licenses all VA firms based in Dubai. And then they basically handle the registration with the federal SCA for that nationwide oversight piece.
Okay.
VAR uses what's called an activity-based approach, which means, for anyone listening, they focus very specifically on the actual services your VASP provides. They put out their big rule book, the Virtual Assets and Related Activities Regulations, back in February 2023. That's the detailed guide you need to follow.
And I heard they have quite a few different license categories.
They do, yeah. 8 distinct license types for VASPs, covering pretty much the whole spectrum of activities. Interestingly, they've also banned anonymity-enhanced cryptocurrencies.
Oh, okay. Privacy coins are out.
Pretty much.
Yeah.
And just this year, 2024, they added more clarity with specific rules on how you can market virtual assets in Dubai.
It really shows Dubai's commitment, doesn't it? Developing these very specific, targeted regulations through VARA. Now, let's pivot to those financial free zones you mentioned, ADGM and DIFC. They operate under their own distinct rules, right?
They absolutely do. And they offer very different options for businesses setting up. Let's kick off with Abu Dhabi Global Market, ADGM. Their regulator, the Financial Services Regulatory Authority, FSRA, they have a really comprehensive crypto framework.
Comprehensive how?
Well, they were actually one of the first globally to set one up way back in 2018. So they've got a few years head start, you know.
Right, they've had time to iterate and learn. So what kind of crypto activities in ADGM need FSRA authorization?
Okay, if your business involves, say, providing custody for virtual assets or acting as a broker-dealer or even offering advisory services related to VAs within ADGM, then yes, you need FSRA authorization.
Yeah.
They have a clear framework for spot crypto activities, the exchanges, custodians, and it all operates under English common law principles.
And ADGM has this reputation, doesn't it, for being quite open to international firms, especially in fintech and crypto.
That's definitely the case. They allow 100% foreign ownership, and they actively try to foster a supportive, innovation-friendly vibe. VA trading platforms in ADGM are regulated as multilateral trading facilities, MTFs.
MTFs, right, like traditional finance.
Exactly. So to do any regulated VA activity in or from ADGM, you need what's called a Financial Services Permit, an FSP, from the FSRA. They've also been quite forward-thinking in setting up frameworks for things like blockchain foundations and DAOs, decentralized autonomous organizations, and they've put out guidance on regulating VA activities generally.
Okay, so ADGM seems quite established, maybe broader in some areas like DAOs. What about the Dubai International Financial Center, DIFC? How are they tackling VA regulation?
DIFC also regulates virtual currency, though their major push really gathered steam around March 2022. Their regulator is the Dubai Financial Services Authority, the DFSA.
DFSA, got it.
They updated their rulebook in 2021 to include something called investment tokens, and then they launched their crypto token regime in November 2022. So you can see maybe a more specific initial focus there on tokenized assets.
Yeah, it sounds like tokens were the initial priority, maybe more than the broader virtual assets category.
That's a reasonable take, yeah. And they're actively refining it. January 2024, they put out a consultation paper suggesting changes to their crypto token rules. And then just recently, March 2024, they enacted a whole new digital assets law.
A new law?
Yeah, law number 2 of 2024. And it's significant because it formally defines digital assets as a type of property under DIFC law. That provides really important legal clarity.
That is fundamental, defining it as property. So DIFC is really positioning itself as the place for firms offering financial services specifically linked to digital assets and crypto tokens.
Precisely. If that's your game offering financial services related to tokens from within DIFC, then you need the right license from the DFSA. They've got various categories: exchange licenses, wallet providers, custody brokerage management services.
So ADGM and DIFC, both distinct environments within the UAE, each with its own flavor and focus. It really hammers home the point for listeners. You have to weigh these differences carefully against your specific business plan.
Absolutely critical. Now, just stepping back to the federal level again for a sec, there was a really important law that kind of ties a lot of this together. Federal Cabinet Decision number 111 of 2022.
Ah, yes, number 111. That sounds pretty pivotal. What did that resolution actually do for the VA sector?
It's really key, this one, because it lays down a federal framework for regulating virtual assets and VASPs across the entire UAE. And crucially, that includes the financial free zones.
Ah, okay, so it applies everywhere.
Yes, it basically mandates that anyone doing VA business in the UAE needs approval and a license, either from the federal SCA or from a recognized local authority like VA in Dubai or the FSRA at ADGM. Operating without that license, strictly prohibited under this resolution.
So it sets that fundamental baseline licensing requirement nationwide.
Exactly. It formally names the SCA as the main federal regulator, but also acknowledges the roles of local bodies like VAA and FSRA. The aim is coordination, consistency across the country.
And the objectives.
The stated goals were, well, establish a clear legal framework, define rights and responsibilities, ensure strong AML-CFT compliance, and of course attract reputable international crypto companies to set up in the UAE.
So it confirms SCA's overall federal authority then?
Yes, it does. But it also clarifies their power to delegate certain functions to those local bodies like VAA and FSRA. The resolution also lists the specific VA activities that need a license. Things like running a platform, exchange services, transfers, custody, wallet services, token services.
Pretty comprehensive list.
It is, and it sets minimum requirements for getting a license. Like you can't be on terrorism lists, you need certain capital levels, strict AML-CFT compliance is a must. Oh, and it specifies you need your headquarters physically in the UAE.
That seems like a really foundational piece of legislation then, laying the groundwork for licensing, defining the roles of the different regulators.
Absolutely fundamental. And then, building on that coordination idea, there was a pretty significant cooperation agreement announced just recently, September 2024, between the federal SCA and Dubai's VARA.
Ah, SCA and VA are working together. That sounds like it could really streamline things for businesses potentially. What's the main goal of that agreement?
Yeah, the big aim is to boost the UAE's position as a leading global hub. How? By improving the operating environment for VASPs and really clarifying how SCA and VAR will cooperate on regulating the sector. It sets out clear rules and procedures for licensing and supervising VASPs, especially those in Dubai.
So, how does this practically change things? Say, for business wanting to operate in Dubai, but maybe also serve the rest of the UAE?
Okay, so under this agreement, if you want to operate in or from Dubai or serve Dubai customers, you now primarily need to get your license from VAR.
Okay, VA first for Dubai.
Right. Then that VRA license becomes the basis for your registration with the federal SCA. And that SCA registration allows you to operate in other Emirates too, assuming you meet any extra SCA requirements.
And if you only want to operate outside Dubai,
Then you typically go straight to the federal SCA for your license.
that does sound much clearer. A more streamlined path, especially for Dubai-focused businesses with national ambitions.
It should be, yes. The agreement also sets up ways for SCA and VAR to work together on supervising VASPs, coordinating penalties, sharing info and stats, even cooperating on training staff. It really streamlines things for Dubai-based firms wanting that national reach. And it signals this joint commitment to using regulation to actually help business grow responsibly. The goal is consistent standards, a more unified approach across the whole country.
Yeah, that cooperation agreement definitely sounds like a big step towards a more unified, efficient regulatory setup for crypto in the UAE. Okay, now let's really get into the weeds of licensing itself. We know who regulates where, but what are the actual requirements, the process?
Right. And as we've kind of stressed, the requirements, which authority you deal with, it all hinges on where you plan to operate and, crucially, what exactly your virtual asset business will do.
Let's start with defining that then. What activities actually make you a virtual asset service provider, a VASP, needing a license in the UAE?
Okay, well, both VAA in Dubai and the federal SCA have their lists of regulated activities. VAA, for instance, has 8 specific categories.
8. Like what?
Things like providing VA advisory services, acting as a broker-dealer, offering custody, running an exchange, lending and borrowing VAs, management or investment services for VAs, transfer and settlement services, and a specific category for VA issuance.
And you mentioned something unique about custody licensing under VA before.
Yes, good catch. That's a key point.
Hmm.
Under VA's rules, providing custody services is the only activity that demands a separate legal entity and its own dedicated license.
Interesting. Really emphasizes asset safety.
Exactly. It shows the focus on safeguarding client assets. But for the other 7 activities, it's generally possible to get multiple licenses under one main VAA license, with that custody exception, of course. Also, important note, VASPs licensed by VA are typically not allowed to do proprietary trading under that license.
So no trading the firm's own money alongside client activities.
Right. If you want to do prop trading, you need a whole separate company for that.
Makes sense. Separation. What about the federal SCA's list of licensed activities?
The SCA's list covers operating a VA platform, running an exchange, transfer services, trading, custody, and as we discussed, ADGM's FSRA regulates a wide range of lists: virtual assets, digital securities, derivatives, VA funds, and in DIFC, the DFSA covers financial services linked to digital assets and crypto tokens, issuance, trading, dealing, arranging, advising, asset management. It's broad.
It's clearly very comprehensive. They're trying to regulate pretty much every angle of the industry. For anyone listening, it just highlights how vital it is to know exactly what your business will do from day one to get the right license.
Absolutely. Nail down the activities first,
What?
then you overlay the jurisdiction piece again. Onshore UAE, outside the free zones.
Mm.
Generally, you're looking at an SCA license.
Mm.
Primarily based in Dubai, but not DIFC. That's VARA, which now includes that default SCA registration. Abu Dhabi Global Market, ADGM. You need a financial services permission, the FSP from the FSRA, often called their VASP license.
Yep.
Dubai International Financial Center, DIFC. You need the appropriate license directly from the DFSA.
Mm-hmm.
And even in other places like Ras Al Khaimah's Rakesh zone, you might deal with Rakesh itself and potentially federal SCA oversight, though Rakesh specifically set up ARA or IGO for VA companies.
Sorry, caving out, right.
And don't forget other free zones like DMCC or DWTC by Multi-Commodity Center and Dubai World Trade Center. They offer crypto blockchain licenses too within their own regulated frameworks.
Wow, okay, so quite a menu of jurisdictions, but that SCA VR agreement should hopefully make it a bit simpler if you're Dubai-based but eyeing the whole country.
That's the idea. Now let's look closer at the types of licenses available and what they let you do. We mentioned VA has 8 distinct types.
And what's the scope? Are they quite specific?
Very specific, generally, designed to cover those different functions, precisely from giving VA investment advice to running full exchange. Then in ADGM, the FSRA's VASP license covers exchange operations, storage, buying, selling, asset management. But they interestingly categorize licenses based on risk and the type of service.
Risk-based, okay.
Yeah. And they have more specific licenses too, like for an OCP operating a crypto asset business and for running an MPF, that multilateral trading facility.
And DIFC, what licenses do they offer?
The DFSA in DIFC has a range tailored to different VA business models. Licenses for exchanges, wallet providers, custody, brokerage, asset management. And as we said, they have those specific regimes for investment tokens and crypto tokens.
Right.
Plus places like DMCC and DWTC have their own specialized licenses too for crypto trading, distributed ledger tech activities, etc.
It really underscores how specialized these licenses are. You can't just get a generic crypto license in the UAE. You need absolute clarity on your services to get the right fit.
Exactly. Precision is key. And then comes the application process itself, which, from what I gather, can be quite detailed, especially for VA and the FSRA.
What are the key steps? What kind of documents should applicants brace themselves for with VAO in Dubai?
Okay, for VA, it's usually a 2-stage process. Stage 1, get an approval to incorporate, or ATI. Stage 2, the full VASP license application.
ATI first. What's involved there?
For the ATI, you'll typically submit an initial disclosure questionnaire, basically an overview, plus a very detailed business plan, full info on beneficial owners and senior managers, and pay the initial fees.
Okay. And after ATI?
Once you get the ATI, you legally incorporate the company, set up your operations in Dubai. Then comes stage 2, the main VASP license application. This involves submitting a lot more detailed documentation, based on VA's guidance after the ATI.
More paperwork.
A lot more. This stage often involves back and forth with VA, maybe meetings, interviews. You pay the rest of the application fees, the first year's supervision fees, and they might attach specific operational conditions to your license.
Conditions, okay.
Yeah. Oh, and they had that Dubai Legacy program for firms already operating before early 2023. Importantly, all VARA applicants have to show compliance with 4 core rulebooks company: compliance, risk management, tech info security, and market conduct, plus any activity-specific rulebooks.
4 core rule books plus specifics.
Right. And finally, VARA insists on a physical office in Dubai.
That sounds like a really thorough multi-stage process. What about the FSRA and ADGM? How does their application for that financial services permission work?
The FSRA process for an FSP, their VASP license equivalent, is also pretty demanding. You fill out detailed forms, provide lots of supporting info. Their authorization team does a deep dive assessment.
Assessing what?
Your operations, finances, regulatory history, if any, the fitness and propriety of your senior management. They really scrutinize your resources, internal systems, controls. A crucial part is a very detailed regulatory business plan, plus comprehensive financial projections.
Fitness and propriety checks, too.
Very thorough ones, yes, on all key individuals. And, just like VAR, having a physical office lease within ADGM premises is mandatory.
It's clear both VAR and FSRA have these pretty rigorous application hoops to jump through. Lots of prep, tons of documentation needed. Really highlights the focus on compliance and risk management, doesn't it? Only serious players need apply, essentially.
Exactly. Now, assuming you successfully navigate all that licensing, the next big decision is your company's legal structure: mainland company or free zone company.
Right. That's fundamental. Big implications down the line, I imagine. What are the key trade-offs there?
Okay, mainland company. That means registering with the Department of Economic Development, the DED, in the relevant emirate. The big advantage: market access.
How so?
A mainland company can generally operate anywhere in the UAE, deal directly with the local market, no major restrictions, usually a wider range of permitted activities too, maybe eligibility for government contracts. Historically, you needed an Emirati partner, but recent changes allow 100% foreign ownership for many activities now.
That's a big change.
Huge. But setting up often means getting approvals from various government bodies, and you usually need a physical office. License fees can sometimes be higher than free zones, and an annual financial audit is typically mandatory. On the plus side, often higher potential for employee visa quotas. And importantly, mainland companies pay the 9% federal corporate tax on profits over AED 375,000.
Okay. So mainland gives broad market access, more ownership flexibility now, but potentially higher costs and more bureaucratic hurdles. What about the free zone option?
Right. Free zones, these are specific geographic areas with incentives, the big draws, simplified setup procedures, usually 100% foreign ownership guaranteed, and attractive tax incentives.
Sounds good. The catch.
The main restriction.
Right.
Generally, you can't trade directly within the mainland UAE market from a free zone. You typically need a local distributor or agent who is licensed on the mainland.
Ah, okay. Need a partner for mainland sales.
Usually, yeah. Each free zone has its own independent regulator. Physical office isn't always mandatory, virtual options are common, but employee visa quotas are often more limited, maybe 1 to 6 visas depending on the zone and setup.
And the tax benefits.
Potential long-term tax exemptions,
Yeah.
maybe up to 50 years in some cases.
Yeah.
And qualifying free zone persons might get 0% corporate tax, but that's subject to meeting specific conditions. And of course, you have those crypto-focused free zones. DMCC Crypto Center, DIFC, ADGM, RAKDO, DWTC. They offer specialized ecosystems, networking.
So free zones tempt with ownership, tax breaks, and some offer crypto-specific communities. But the trade-off is that limited direct access to the local UAE market.
That's the core decision, exactly. It boils down to your business strategy, your target market. Focus on the local UAE. Mainland might be better, despite the complexities. Aiming international or prioritizing tax benefits in crypto ecosystems. A free zone could be the smarter choice.
A really crucial decision with long-term consequences. Okay, let's shift to the key rules and restrictions you need to live by once you're set up. Things like capital requirements, AML KYC compliance, transaction monitoring, cybersecurity, and any prohibited assets or activities.
Yes, absolutely fundamental for a compliant operation. Let's start with capital. We touched on this, but both VRA and ADGM's FSRA have specific minimum capital requirements, and they vary
Based on the
based on the license type and the specific activities you undertake. VRA has a base minimum paid-up capital, but it climbs significantly depending on activities. For instance, running an exchange or providing broker-dealer services, especially if you hold client assets. Capital needs can jump to AED 800K 1.5M or AED 400K 600K, respectively.
Wow, significant numbers.
They are. Plus, VRA requires you to hold extra expense-based capital in liquid assets. ADGM FSRA also mandates regulatory capital in fiat currency. Again, amount depends on activity. An MTF might need 12 months operational expenses covered, others maybe 6 months. FSRA might add extra buffers based on risk assessment too. The actual capital ranges in ADGM can go from, say, USD 10K up to USD 10 million.
10 million. Okay.
And the federal SCA has its own specific capital rules too. AED 1M plus expenses for an exchange platform, AED 2M for brokerage, AED 4M plus expenses for custody, AED 5M plus expenses for a platform doing other VA services.
It really shows the focus on financial stability, doesn't it? And the capital needed is directly tied to the risk of the activities.
Absolutely. Then comes the massive area. Anti-money laundering,
Yeah.
AML, and know your customer, KYC compliance. This is totally non-negotiable in the UAE crypto space.
What are the core requirements?
Full compliance with the federal AML decree law, number 20 of 2018, and FATF guidelines. That means implementing solid customer due diligence, continuous transaction monitoring, and keeping detailed records.
Right.
VIR's compliance and risk management rulebook spells out specific duties. Appoint an MLRO, conduct AML business risk assessments, have robust policies, perform client due diligence, ongoing transaction monitoring. The FATF travel rule is also key for VA transfers over AED 3D500. You need to collect and send info on the sender and receiver.
The travel rule. Okay.
Both ADGM, FSRA, and DIFC also have strict AML rules aligned with FEPF. And the CBUAE has guidance for banks on VA risks, heavily emphasizing strong AML CFT controls. Crucially, failing to report suspicious transactions is a serious federal crime.
Very clear commitment there to fighting illicit finance and crypto, aligning with global standards.
Very much so, which leads directly to robust transaction monitoring and mandatory suspicious activity reporting. You must have systems to continuously monitor transactions for anything unusual, especially exchanges, payment platforms, custodians.
And if you see something.
You have a legal duty to report it promptly to the UAE's Financial Intelligence Unit, the FIU, via their GoAML portal. That amended cabinet resolution from 2022 reinforces these ongoing obligations. Financial institutions also have to report suspicious VA transactions without delay.
So it's not passive, it requires active, ongoing monitoring and reporting.
Exactly. And being digital, cybersecurity and data protection are paramount. ADGM, VRR, SCA, they all mandate strict cybersecurity protocols, measures against hacking, data breaches.
So what does that mean in practice?
High security for the virtual assets themselves and user data. Things like encryption, multi-factor authentication, thorough identity verification. VArea's Technology and Information Rulebook details requirements for tech governance, security controls, data protection compliance, strong emphasis on meeting international standards. Plus, the UAE's Personal Data Protection Law, PDPL, and Cybercrime Law apply to blockchain systems too, demanding responsible, secure data handling.
It's all about building trust, a secure environment for users. Now, what about things that are just banned, prohibited virtual assets or activities?
Yes, there are definite no-go areas. VAR in Dubai, for instance, explicitly prohibits anonymity-enhanced cryptocurrencies, AECs, and any related business activities.
So privacy coins like Monero are out in Dubai.
Looks that way. Similarly, DIFC's DFSA has banned privacy coins and algorithmic tokens. In ADGM, you're strictly forbidden from taking deposits from the UAE market without proper authorization. More broadly, the cybercrime law criminalizes promoting unlicensed crypto schemes and fraud. And using crypto for illegal transactions, buying illicit goods, funding crime carries criminal liability.
So a clear focus on mitigating anonymity risks and financial crime, plus investor protection by banning certain asset types and activities. Okay, let's talk money. The costs involved setting up and running a crypto trading company in the UAE. It's not just about the tech, is it?
Definitely not. You need to budget for a whole range of costs: licensing fees, registration and corporation costs, office space, visas and employee expenses, legal and compliance consulting fees, even opening that corporate bank account. And these costs can vary wildly depending on where in the UAE you set up.
Let's break some of those down. Licensing fees first. What's a typical ballpark figure, initial and ongoing?
Licensing can be a major expense. VARA in Dubai, for example, Application fees might be ADD 40K to 100K per activity. Then annual supervision fees, potentially even higher, AED 80K to 200K per activity.
Per activity, wow.
Yeah. So if you need multiple licenses, it adds up fast.
Mm.
For an exchange or broker-dealer license, you might look at ADD 100K application fee, AED 200K annual supervision fee each, plus fees if you add activities later.
Okay. What about ADGM?
ADGM FSRA fees also vary. A non-custody intermediary license might be around USD 20K authorization fee. Custodian or combined license may be USD 40K.
Yeah.
And MTF, that's USD 125K. MTF plus custody, USD 145K. Then annual supervision fees from USD 15K to 75K. And MTF exchanges pay a monthly trading levy based on volume.
And the federal SCA?
SCA is fees too.
Really?
State application fee around USD 25K. Annual supervision may be USD 50K.
Mm-hmm.
A specific VA exchange license might have an initial renewal fee of AED 200K.
It's crystal clear. Licensing costs are significant, both upfront and ongoing. And they really differ by jurisdiction and activity scope. What about just registering the company itself? Are those costs separate?
Yes, typically separate from the activity license fees. For example, in the DMCC free zone, registration might be AED 9K 12K. In ADGM, initial registration could be around USD 15K plus an annual fee near USD 13.1K. If you break down a specific ADGM company type, like a private limited by shares, you'd have fees for name reservation, USD 200, incorporation, USD 1500, annual commercial license, USD 4000, business activity fee, USD 4000.
Okay. Adds up. DIFC.
DIFC registration and corporation costs can be higher, maybe around USD 22K initially, with an annual fee around USD 12K. So yeah, these setup costs beyond the specific crypto license also vary quite a bit.
And then physical presence. We know some places mandate an office. What are the typical costs for office space?
Office space can be a big recurring cost. As we said, places like DMCC, ADGM, VRA, and Dubai, even mainland setups usually require it. Rent varies massively by location, size, quality. DMCC, maybe ADD 15K, 50K annually for something basic. ADGM, mandatory leases could start from USD 20 car year for a business center spot, or USD 55 plus catch-free FT annually for fitted offices.
Mm-hmm.
VI insists on a Dubai lease. Size often linked to visas needed, maybe 80 LBP per visa. Mainland smaller spaces might start around ADD 30K annually, but it scales up. DIFC also requires office space in its zone.
So that office requirement, especially in key spots, can be a substantial ongoing hit to the budget. What about staffing costs, visas, employee expenses?
Those depend on your team size, nationalities, obviously. DMCC visa costs might be ADD 3.5K, 6K per visa. ADGM may be starting from USD 1.5K per visa, plus establishment card channel fees. Mainland usually offers more visa flexibility. Free zones often have limits based on company size type. These costs scale directly with headcount.
And given the regulatory maze, legal and compliance help seems vital. What do those consultants typically charge?
Yeah, expert help is highly advisable, and it costs. DMCC, maybe AED 15K, 25K for initial compliance consulting. For the heavily regulated ADGM DIFC, setting up a full compliance framework could run USD 70K, 120K. Getting a VIRA license likely involves significant legal fees too, given the process. It's an extra cost, but honestly invaluable for avoiding huge headaches later.
Absolutely. Penny wise, pound foolish, not to get good advice there. Lastly, those often forgotten costs. Opening the corporate bank account. We know it's tricky for crypto. Are there specific fees?
Yes, there can be. Initial setup fees, maybe AED 3K, 7K, could be more, depending on the bank. Banks might impose hefty minimum balance requirements too, plus costs for attesting all the company documents they demand. These often get overlooked initially, but definitely need to be in the budget.
It certainly sounds like launching a crypto trading firm in the UAE requires serious financial planning, well beyond just the core business idea. Now, as we've mentioned, getting that corporate bank account, it can be a real sticking point for crypto businesses, right? Because of all the AML/CTF focus. Why is it such a challenge?
It really boils down to risk perception and regulation. Banks globally, including in the UAE, face intense pressure on AML/CTF compliance. The crypto industry, fairly or unfairly, is often seen as higher risk. So banks apply extra caution, more intense due diligence when dealing with crypto-related applications.
So what specific hurdles might a crypto company hit when trying to open a UAE bank account?
Well, expect way more scrutiny than, say, a standard trading company. Banks can be wary of SMEs or firms in new tech sectors like crypto, seen as less established. Offshore or free zone companies might face more questions than mainland ones. Transparency is everything. They'll dig deep into your source of funds, your business model.
Mm-hmm.
The pseudo-anonymity in crypto can make it harder for banks to tick their KYC boxes. Some banks are just generally more risk-averse to the sector. You might find some insist on having a UAE resident director or shareholder. The whole approval process can drag on for weeks, even months, because of the extra checks.
That sounds frustrating.
It can be. A lack of a physical local office can be a red flag for some banks, and they almost always require the authorized signatories to show up in person for the final steps.
Sounds like a minefield.
Yeah.
So what's essential? What documentation, what approach gives you the best shot at actually getting an account opened?
Preparation is absolutely everything. You'll need your valid trade license, certificate of incorporation, memorandum and articles of association, all the basics, clear passport copies for all shareholders, directors, Emirates IDs residence visas for local signatories, proof of that physical business presents the office lease,
Okay.
a formal board resolution approving the account opening, naming the signatories, comprehensive proof of your business activity contracts, invoices, a detailed business plan, financial projections, your ultimate beneficial owner UBO declaration, strict KYC adherence, and a crystal clear documented source of funds. That's non-negotiable.
Source of funds is key.
Crucial. Maybe a bank reference letter? For high-risk sectors like crypto, expect to provide detailed operational procedures, internal controls, especially AML KYC frameworks, proof of regulatory approvals, like from Vieira or SCA, if applicable. Be ready for that mandatory in-person meeting, and make sure your company meets the bank's minimum capital requirements for the account.
Wow. Thorough prep, total transparency, perfect paperwork sounds like the only way through. Are there any banks maybe a bit more open, more crypto-friendly in the UAE? Or alternative options?
It's tough, but yes, things are slowly changing. Some UAE banks are becoming more willing to engage with legitimate, well-regulated crypto businesses, provided they meet those high compliance bars.
Okay, that's hopeful.
There's also the potential of DeFi platforms for certain things, though DeFi has its own risks and regulatory gray areas. Some emerging banking services are specifically targeting fintech startups. They might be more understanding. New digital banks like WeoBank or Zanbank could offer more flexible solutions.
Digital banks, interesting.
For online businesses, payment gateway accounts, PayTabs, Stripe, Checkout.com might work for certain transactions. Firms with global operations might look at offshore banking, but carefully considering all the regulatory implications. There's mention of places like the Kingdom Bank or Jaitan Bank possibly offering crypto-specific accounts in Dubai, but definitely do thorough due diligence on any unfamiliar institution.
Right, check them out carefully.
And finally, specialized service providers exist who focus specifically on helping crypto firms navigate the bank account process. That could be a worthwhile investment. So, still challenging, but options are starting to emerge.
Definitely sounds like persistence and exploring every avenue is key for banking. Okay, so you're finally up and running, license secured, bank account hopefully open. What about ongoing compliance, reporting obligations? It's not just set up and done, is it?
Absolutely not. Compliance is a continuous, living process. It needs constant attention, resources. First off, annual license renewals. For VAR, ADGM, FSRA, SCA, they all require annual renewals, fee payments, updated documents confirming ongoing adherence. Budget for these.
Annual renewals, okay. What else?
Regular, detailed financial reporting. VARA, for example, requires monthly, quarterly, and annual reports. We're talking balance sheets, P&Ls, cash flow, VA wallet addresses, related party transactions, group investments in VAs, board minutes, financial compliance proof, projections, risk reports. It's extensive.
Monthly, quarterly, annual. That's a lot of reporting.
It is. Annually, you need audited financials, senior management compliance assessments, certifications, client onboarding samples, product descriptions, group structure updates, board details. The ADGM FSRA also has specific reporting needs, especially for asset managers. SCA requires you provide any info they request promptly.
So it's a constant cycle. Renewals, heavy reporting, always meeting evolving regulatory standards. Definitely not set it and forget it.
Not even close.
Yeah.
It demands proactive focus to stay licensed and legal. Then there's continuous AML KYC compliance.
Yeah.
You have to stay updated on rule changes, keep monitoring transactions, keep verifying customer identities. Maintaining robust security is also an ongoing job. If you're VARA licensed, you must continuously adhere to their full market product, FMP regulations. That's the 2023 VA regulations, plus all those rule books we mentioned, company, compliance, risk, tech info, market conduct, plus activity-specific ones. The FMP is the bedrock for conduct, licensing, cybersecurity, operations in Dubai. Adherence is vital for keeping your license.
FMP adherence, got it. Anything else major ongoing?
Yes, ongoing implementation and compliance with the FATF travel rule, collecting and disclosing that originator beneficiary info for VA transfers over AED 3,500. It's a continuous obligation for VASPs to fight anonymity in larger transactions. ADGM mandates travel rule compliance too.
So constant vigilance, renewals, reporting, AML KYC updates, VA rules, travel rule, it's a full-time job in itself
It
almost.
really requires dedicated compliance resources and attention, yes.
Well, this has certainly been a thorough deep dive. It's incredibly clear the UAE offers this really promising, forward-thinking environment for crypto, but wow, it's also a sophisticated, intricate landscape. Demands very careful navigation, a deep understanding of all these parts.
That's absolutely the key takeaway. Huge potential, huge opportunity in the UAE's VA sector, yes. But you must approach it with eyes wide open. Carefully consider the jurisdiction, the legal structure, the exact license needed, the capital, the critical AML/KYC piece, and brace for those ongoing compliance demands.
And it sounds like step one, absolutely non-negotiable, is getting expert legal counsel, someone with real specific experience in UAE financial and virtual asset regulations. That guidance seems invaluable.
Essential, couldn't agree more. And beyond lawyers, do thorough due diligence on everything. Licensing, banking, operations setup. Every single aspect needs careful planning to avoid pitfalls and ensure a smooth, compliant launch.
Ultimately, the UAE's commitment to being a top global crypto hub creates real opportunities. It's a well-regulated, increasingly innovative ecosystem. But as we've laid out, you need to go in fully prepared for a detailed ongoing process that demands serious focus on compliance and adapting to change.
Precisely summed up.
And maybe a final thought for everyone listening to chew on. Given how fast both the technology and the regulations are moving, how do you think this constant push and pull between innovation and rules will shape the future for crypto businesses, not just in the UAE, but globally? It's definitely something to watch closely as this whole space keeps evolving. Thanks for joining us on this deep dive.